Well, I guess I'm going to begin because we are right at noon, and I want to welcome everybody to Nonprofits and PPP and What Comes Next. I'm Krista McLaughlin. I'm the Marketing Manager for Whisman Giordano, and we thank you for joining us today. Just a couple of housekeeping things before we begin. This webinar is being recorded, and it will also streaming currently live on Facebook. Everyone's on mute, but the chat feature is open. So in the spirit of a real roundtable, we invite you to chime into our panelists and to talk among yourselves. We do encourage you to submit questions throughout, and anything we can answer today, we will answer tomorrow. So we are also going to send out the webinar and followed by a short post-event survey. If you could fill that out, it's literally 5 questions, so it'll just take a moment of seconds. So to begin everything, I will hand it off to Joseph Giordano, who is the President and Managing Partner at Whisman Giordano.
Thank you, Krista. Welcome, everyone. And I guess now it's 12:01, so I can say good afternoon, since it's actually afternoon. As Krista already said, thank you for joining us today. We're here to talk about the Paycheck Protection Program and how it applies to nonprofit organizations and what's next. We were lucky and we are very happy to have had a lot of your questions come in prior to the event. I'm going to tackle the first question and then I'm going to introduce our panelists. We had a handful of questions on applying for the forgiveness for the Paycheck Protection Program. Because of the Flexibility Act that was passed a little less than, well, signed into law, I guess is the right wording, a little less than 2 weeks ago. The SBA has to adjust the form that they had previously released for forgiveness. So as of today, you cannot apply for forgiveness yet. Once they readjust the form, we expect to have additional guidance on timelines for forgiveness and how you can apply for that forgiveness. And the way this program has been going, it's very possible that they'll release that form in the next hour. So if that happens, we're happy to have a conversation with you tomorrow. So let's move on and let me introduce our panelists. First, we have Julie Morgan. Julie is a partner in our firm, and she is the chair of our accounting and auditing department. Then we have Frank DeFroda. Frank is a principal in the firm, also in the accounting and auditing department. And Madison Gerdts is a supervisor in our firm and is, well, specialized in not-for-profit organizations. Madison represents our firm in our national not-for-profit CPA Alliance. With that, I'm going to tackle one of the questions we received. And Julie, and I apologize for looking down. I still work with one of these books. I know I look like a young guy, but maybe not. So Julie, a lot of the questions that came through were directly related to PPP. However, there are other options to help with cash flow for a not-for-profit and in some cases small businesses. Do you mind talking about a few of those?
Yeah, Joe. In addition to other tax relief, the CARE Act provides some new employee tax credits, which I'm going to talk about. And those are the CARES Employee Retention Payroll Tax Credit and the CARES Payroll Tax Deferral. So employers which are eligible for the Employee Retention Payroll Tax Credit are those whose operations were fully or partially suspended due to COVID-19 related government orders, which limited commerce, travel, or group meetings, or whose gross receipts for the 2020 quarter declined more than 50% when compared to the same quarter in 2019. The eligibility for this credit continues on through the 2020 quarter, in which gross receipts become greater than 80% of gross receipts compared to the same quarter in 2019. So there are some calculations that you'll need to make and some documentation that you'll need to retain to support your credit. Employers which are not eligible are those who received or will receive an SBA PPP loan. So for those who are eligible, employers with greater than 100 employees, the tax credit is 50% of wages up to $10,000 paid to employees who are not performing services, and the maximum credit is $5,000 per employee. For employers with 100 or fewer employees, the tax credit is the same as 50% of wages up to $10,000, except qualifying wages include wages paid to any and all employees, the maximum credit still being $5,000 per employee. Qualifying wages are those wages paid after March 12, 2020 and before January 1, 2021. The employment credit is reported on the employer's quarterly federal tax return, which is generally Form 941. And if your credit exceeds the calculated tax for the quarter, you would complete a Form 7200, which provides advance payment of the employer credits. The advance payment then is factored into subsequent Forms 941. So if you were eligible for but didn't take the credit in quarter 1 of 2020, you can still go back and amend that tax return. If you outsource your payroll duties, remember that you remain responsible to ensure that tax returns are filed and deposits and payments are made. If you're eligible for the Employee Retention Payroll Tax Credit, you should contact your payroll service provider for specific instructions on implementing and reporting the credit. The CARES Act also provides for payroll tax deferral, regardless of whether or not the employer received a PPP loan. So employers of any size can defer payment of the employer portion of Social Security tax, which is 6.2% of wages up to $137,700 for deposits due on or after March 27th, 2020 and before January 1, 2021. 50% of the deferred tax must be paid by December 31, 2021, with the remainder due by December 31, 2022. An exception to those due dates applies to employers who've received a PPP loan. Those employers can defer deposit of the employer's share of Social Security tax for deposits due on or after March 27, 2020, but only through the date the employer receives a decision from its lender that the loan is forgiven. Once the employer receives a decision from its lender that its loan is forgiven, the employer is no longer eligible to defer deposit of the employer's share of Social Security tax due after that date. This payroll tax deferral is also reported on Form 941. And again, if you outsource your payroll duties, you'll want to contact your payroll service provider for specific instructions about who will take on the responsibility for calculations and reporting. Finally, with both the Employee Retention Payroll Tax Credit and the Payroll Tax Deferral, it's important to document and retain all your calculations along with all the supporting documents. You'll need to be able to provide written documentation of the methodology that's been used to determine the credits or deferrals taken if asked to do so by government agencies. So next steps: assess your eligibility, quantify the tax relief, recover the cash, and document your procedures. If you've got specific questions about how these tax relief options affect your organization, reach out to us. Our contact information will be provided at the close of our presentation. Joe?
Julie, just a quick follow-up, and I think most companies, I know that most of the entities that we work with as a firm, we recommend that they use a payroll company. What if they do payroll in-house?
If they're doing payroll in-house, the most important thing for them to do is make sure that you document your calculations. Document your calculations, keep the supporting documentation, your payroll journals, your payroll records, anything that's related to those calculations.
Okay. And I'm going to add one, as someone who sits on a finance committee for a not-for-profit organization. One of the things, if you do defer your payroll taxes, you do want to take that into account into next year's budget or the 2022 budget, because it is going to be additional cash flow that's beyond your normal calculation. So just a little additional financial piece of advice.
You know, absolutely, Joe. And I'm going to say the same thing. You know, the deferral program is doing just that. It's deferring the payment of that liability, but it doesn't go away. So again, to your point, it absolutely should be factored into your cash flow budgets for 2021 and 2022.
Okay, so we talked a little bit about payroll and employees, and Madison, we had some other questions about, well, I'm going to read this off and I'll do the best I can to not read. One of the conditions of receiving full forgiveness for PPP is maintaining your full-time equivalents, or as we all know, FTEs. Madison, can you tell us about how we should be calculating our average FTEs? You're on mute.
Yep. Thanks, Joe. So when determining your FTE or full-time equivalent, it's important to recognize that this figure will not necessarily be the same as the number of actual people on your payroll, as you may have things such as turnover or part-time or seasonal employees. Keep in mind that no one employee can count as more than one FTE, i.e. overtime does not apply. When calculating your part-time FTE, any part-time or seasonal employees that work less than 40 hours per week on average will be added together. Alternatively, the SBA has allowed for administrators to assign a value of 1.0 for all full-time employees and assigning a value of 0.5 for all other employees. So let's talk more about how this figure might fluctuate during your 8 or 24-week period. If you laid off employees in March, you can absolutely rehire them. This is the point of the program. Just be sure that you do so by the end of the year, 12/31, to qualify for full forgiveness, thus reinstating your FTE count. If you attempt to rehire those employees whose employment was terminated due to COVID-19 and they reject your offer, you must prove that an offer was made at the same rate or for the same salary at the same number of hours as the employee worked prior to being laid off. Additionally, you must provide documentation of his or her rejection of your offer. Now, what if your employee resigns or is fired for a just cause? You can either fill this position using PPP funds, or, assuming you can document your rejected offer, you'll likely qualify for an exemption. I know that was a lot, but to assist you in this calculation, the AICPA has developed a really great spreadsheet that is updated regularly for this calculation, a link to which we will provide in the follow-up email to this presentation.
Just to add to that, Madison, as of yesterday, they have not updated the percentages from the 75%, 25 to the 60-40, which was in the
Yes.
Flexibility Act.
Thank you for noting that.
I would expect the AICPA would get on that fairly quickly, but my assumption is they're also waiting for the SBA to release their new forgiveness form. Before we jump to the next question.
Joe, can I just add something to that?
Yes.
For those of you who don't know, there are two safe harbor rules that just got signed beginning of June as well. The first provides a safe harbor from reductions in your loan forgiveness based on reduction in your full-time equivalent employees for borrowers that are unable to return to the same level of business activity the business was operating at before February 15, 2020, due to compliance with requirements or guidance issued recently by the Secretary of Health and Human Services related to worker or customer safety requirements relating to COVID-19. So that's one exemption you need to consider when you're filling out the FTEs, as Madison explained. In addition, there's a second safe harbor that provides a safe harbor from reduction in loan forgiveness based on reductions in full-time equivalent employees to provide protection for borrowers that are both unable to rehire individuals who were employees of the borrower on February 15, 2020, and unable to hire simply qualified employees for unfilled positions by December 31st, 2020. So those are going to be two key factors when you're going to calculate your FTEs, which might actually help you in the long run. So just be aware of that as well.
Thank you, Frank. Thank you for those additions. I want to go back. There are a few questions in the chat. Julie, just want to clarify on the tax credit refund on payroll taxes for Social Security taxes. Did you say it was not eligible for employers that receive PPP? And you're muted. So in the chat,
the tax credit, the employee retention payroll tax credit is not eligible for those employers who received or will receive the PPP loan.
thank you.
Yep.
We also have another question where we're mentioning 1231.20 for calculations for FTEs and other tax credits. For PPP, the eligibility for forgiveness, if you received PPP prior to June 5th, you have the option of 8 weeks or 24 weeks for forgiveness. There is another question, so we'll go into more detail on that a little later. So the 1231.20 is really your rehiring, your timing of those items, and the program itself will not go beyond 1231.20 as it exists today. So if you received your loan prior to June 5th, it's either 8 weeks or 24 weeks, if that makes sense. I hope that answers the question that is in the chat. Okay. Moving on to our third question, and this is personally my favorite and one that I'm really glad that I'm not answering. So thank you, Frank, for taking this one. One of the biggest issues with not-for-profit organizations, Frank, is that the issue of what we'll call quote unquote double dipping. So can you talk about this issue, what it means, and how management should address it with regard to PPP and forgiveness?
Okay. So basically, there's about 3 or 4 scenarios that double dipping is not allowed. The first has to do with the Paycheck Protection Program, loans, and Family First Coronavirus Relief Act, the employee paid leave. Okay. Basically, what this states is that PPP loans cover payroll costs, including costs for employees, vacation, parental, family, medical, and sick leave. However, the CARES Act excludes qualified sick and family leave wages for which a credit is allowed. So basically, if you take in the credit, you can't use the PPP loans for the payroll costs. So there's no dipping involved for that area. The second area has to do with the PPP and employee retention credit, which Julie touched on earlier. Basically states to qualify for PPP loans forgiveness, expenses must be incurred and paid during the 8-week period of coverage, beginning on the date of the first loan disbursement. Since the employee retention credit provides a tax credit, which is a reduction in your taxes paid, you cannot claim forgiveness for expenses not incurred and paid with the PPP money. The third area has to do with PPP and the Economic Injury Disaster Loan, or EIDL. Basically states you cannot use funds from both loans for the same purposes. For example, you can't use both EIDL money and PPP money towards payroll. As long as you do not use the EIDL money for payroll costs, your PPP eligibility will not be affected. If the EIDL is used for payroll costs, your PPP loan amount will have to be used to refinance the EIDL loan funds. You cannot have a PPP and EIDL for payroll expenses between 1/1/2020 and 4/3/2020. Another area, there is a EID advance grant, which is for $10,000, okay? As a grant, it will not have to be paid back. However, if you receive PPP money, you need to reduce the advance by the PPP. In addition to that, if you're a nonprofit that is receiving funds from a specific funding source to continue a program, for instance, if you have a meals program and you're still collecting fees for meals and state grants, you cannot use the PPP for payroll costs. You can't supplant your expenses with the PPP funds. So just be aware of that. As the auditors, when the auditors come in next year, they'll be reviewing where the PPP money was used. And if you use it inappropriately, you could have a finding in your audit report. So be careful when you're spending those funds.
Frank, if I may, just to follow up on that, as we all give advice to management for not-for-profits, for me, and this is just my 2 cents, I would think it would be better to not get the forgiveness and pay the 1% loan than to have a compliance finding, potentially a deficiency in internal control. What do you think about that?
I would agree with that. If you have a finding in your report that could potentially jeopardize, future funding from, grantors, down the road. So I think it's important to watch, where you're spending those funds.
Right. I have nothing to add to that. So I think you touched on this, but just to clarify, what if I'm funded by something like the state of Delaware's grant and aid? Would that be a potential issue affecting my forgiveness?
I think the grant and aid is more for operating purposes. So it's not restricted for a specific use or program. So I think you would be okay using those funds.
Okay, and we have a few questions, so let me jump in, and I could see Krista just jumped on the screen. So the first one, we were asked to repeat that recommendation. If you have federal state funds where compliance is an issue, and those funds are to pay specific people, such as program coordinator or something of that nature, and you're still getting your funds, you're still drawing, the funding did not stop, you can't get forgiveness for PPP for that and be paid by a federal or state grant that's specific. So our recommendation would be, don't ask for forgiveness. And, if there's other people that you can get forgiveness for or other costs, that's what we would do. And if you don't get forgiveness, it's still a very cheap loan. 1% is very low interest. So as a business owner, given the choice of a compliance issue with the federal or state government and a 1% loan, I would take the 1% loan. I hope that answers that question. We have another one, and Frank, this kind of touches on what you just talked about. If you have a federal grant, can you put that grant on hold and not take draws from that for a time and use PPP money and still get, and I assume that to add to that, you're still looking for forgiveness.
Yeah, I think you have to use the federal funds first before you can use the PPP money. Again, you can't supplant the funds. You can supplement, like Joe said, if you have additional employees that need to get paid, you can use it, but you can't, forego the federal dollars and use the PPP money first.
All right. Now, just to clarify that even further, if the funding agencies told you specifically, we're going to extend our funding another 6 months and you can use other funds for this purpose, that's a different scenario.
Correct.
So unfortunately, there's nothing that's completely cut and dry in this program. It's been very fluid, and I think we all know it, hence the confusion. We have one. So if you receive $200,000 in PPP and $10,000 in an EIDL advance, no more than $190K can be forgiven. I believe that is correct.
That is correct.
Okay. We have a question on what determines whether the period is 8 weeks or 24. to some extent, we have to wait for the new form to come out. My understanding from reading the highlights of the act and as much of the act as the Flexibility Act as I could, anyone who's read laws before knows how painful that can be. Our understanding is it's really up to you as I'm going to use the word borrower because until it's forgiven, this is a loan. We have another one, and Julie, I think you touched on this, but I'm going to ask, how long can you defer the employer payroll tax?
Through the last quarter. Well, when you're saying deferred, it's for payroll taxes payable through December 31, 2020. You're deferring the repayment through December 31, 2022, with 50% of it due by December 31, 2021.
We have one more that I see, incurred or paid, and that is correct. That was clarified within the last few weeks. I apologize, my timeline. This has been the most confusing program I've seen in my short career, I guess I'll call it. And
right, that's incurred or paid, correct, contrary to incurred and paid.
Okay, we have, how do we account for employees paid by state contracts? Can we count them as full-time employees? Madison or Frank, that comes into the full-time equivalent, but it also kind of touches on double dipping. So I'm going to defer to you guys.
So I'll just take the first part of that question, Frank. So your program employees, regardless of where the funding comes from to pay for them, will be included in your full-time equivalent calculation. And then Frank, if you want to take the last half.
Can you repeat the second half of that question, please?
Okay. I think that actually answered it. I think if it didn't, please follow up on that. I think we answered that question.
Okay.
Okay, here's one. Our entity received PPP funding that we will exhaust by June 30th. Can we use the EIDL advance that we received for payroll after June 30th in July? And this is kind of a bit of a guess, but I think that even if you use it in July, it's still going to be deducted on the forgiveness application based on what we know today, unless something changes. Is that sound correct to the rest of our panelists?
Yes.
Okay.
Yeah,
Okay.
I'll use that for other costs, rent, mortgage, payments.
Right.
Correct.
Yeah.
There are additional costs that we'll cover in the next couple of questions that you can use those funds for.
There's a question of, does this only apply if you have funding specifically for payroll? I think any contract or grant you have with a government agency that gives you funding for specific purposes that would be forgivable. So we have another question on that, so we'll touch on that in a short time. If you receive grant aid, will that cause a finding? I don't believe so. I think, Frank, you already answered that. You agree with that? Okay. Yeah. All right. Some of these are very specific to your entity, and I don't, based on our industry and confidentiality, I don't want to go too deep. So I would suggest some of you, we are available to go over anything you would like. You can simply reach out to any of us. Our contact information will be on a PowerPoint towards the end of our session here. Private funds from foundations for staff. Julie, Madison, or Frank, what would you say about that? So I get a grant from Longwood Foundation for staffing.
Yeah, I believe it works the same way as funding that's restricted in any other or from any other organization, from any entity, individual, foundation, otherwise.
Now here's a question, and this is something that I would think, being a Giordano, and those of you that know me know how I think. would you recommend reaching out to that private foundation and saying, will you extend our timeline to pay those people because we received PPP or EIDL?
Why not? Yeah.
Right. Yeah. You
Yeah.
know the answer if you don't ask. If
Right,
you ask,
yeah.
you might get a yes.
Yep.
Okay. Okay. If we receive both PPP and EIDL, can you charge salary to both as long as the salaries charged are for different pay periods so that there's no overlap? I believe the answer to that is yes. Is that correct? So you're not paying the same payroll.
Yes.
Everyone agrees with that? I think so. I mean,
Yeah.
as a logical person. Here's one. Can I use the EIDL money for ongoing payroll expenses that extend beyond PPP? Once PPP is forgiven, can I continue to use EIDL funds afterward for my payroll? I believe that is correct. Is that? I still think EIDL, if you got the advance, it's going to reduce your forgiveness based on the prior form. Is
Right.
that's correct?
And Joe, there was a question that came in. What is EIDL? EIDL is a Small Business Administration Emergency Injury and Disaster Loan.
Is it strict 8 or 24, or can you use the period that the funds are fully used? As of right now,
8 or 24.
as we understand it, it's 8 or 24. With the new forgiveness application, we would expect additional guidance from the SBA. Unfortunately, right now, we're still a little limited in that. Based on what we understand, it's one or the other. If the EIDL is used for operating and not payroll, do you need to deduct from PPP? And the answer to that is yes. It's still, unless something changes, and it could, as of what we understand from the Flexibility Act, that was the most recently passed act, that will still be deducted from forgiveness. So I think we tackled all of the questions that I've seen so far. We'll move on to the other expenses that are eligible for forgiveness. Madison, there was a specific question regarding CAM expense and whether they're included in forgivable costs. Are they, and what other costs qualify?
Yeah, absolutely. So right off the bat, at least 60% of the funds that you receive must be used towards salaries, wages, state and local taxes, medical benefits, and even as of the most recent revision signed into law, bonuses for employees who earn less than $100,000 per year can be included in this total. So with that said, a maximum of 40% of the loan proceeds may be used to cover things like rent, mortgage interest, and utilities. So the last one is kind of an array of different interpretations. As of the most recent guidance, we understand utilities to include electricity, water, sewer, gas, telephone, and internet. CAM would be included as determined by the lease agreements, as well as transportation and fuel costs. A good rule of thumb is to use your most recent 990, apply the same methodology used to determine these expense line items in previous years, and project that onto your current year information. There are a lot of little details in this, so I'm sure we have a lot of questions regarding specifics in your organization. I would like for you to consider reaching out to me directly for these questions, as again, to protect anonymity of our clients.
Mm-hmm. Thank you, Madison. One more, and this is, if we believe we are probably not going to be able to obtain forgiveness without risking a finding, can we just return the PPP funds when due and pay the 1% interest due without any additional? I'm going to interpret the word penalty as finding. The answer to that is, I believe yes. If you don't get forgiveness and you don't use PPP funds in replacement of other state, federal, or federal funds. I believe that is correct. Frank, Julie, Madison, do you agree with my thought?
I
there?
do. Yeah,
I
I
agree.
agree with you.
Agreed.
Okay. We've kind of tackled the 8 weeks or 24-week option. We did get a question of which should I use. If you don't mind, I'm going to take this one. As a business owner, unless I knew with 100% certainty that I would obtain forgiveness in 8 weeks, I would elect 24, because that gives me more time to cover more payroll and more of my costs to obtain forgiveness, because not having to pay it back and not having to pay interest is better than having to pay it back and pay interest.
Joe, we have a few questions in the Q&A. I just wanted to hand off to you for a second.
Okay.
One came in from, if GIA funds have typically been used for payment of salaries in prior months, can they be repurposed for other expenses during the loan period so the payroll is eligible for forgiveness?
I believe the answer is yes. Grant and aid in general, and I'm going to defer to Frank and Julie and Madison. I believe that funding doesn't specify that it's just for payroll. Is that correct?
That's correct. It's in general is it's just used for operations. So in your case, for this particular organization, they've chosen to use it for payroll. They can apply it to other areas as well.
Okay.
And then we have a few questions about expenses and what qualifies. So the question is, what is meant by transportation? Did you say fuel costs like filling up a company van? Also, are cell phones included in telephone expenses?
Yes. So cell phone expenses are included in your telephone. And then the fuel cost, yes, I do mean filling up your company van. And then I believe there was one more part of that question, or?
I think you got it.
Right, it was cell phones and telephone expenses, I think.
Right.
Okay, yes.
Right. So transportation, I would add to that, if mileage reimbursement would be in there, tolls if you're traveling throughout the state, I would say all of those. The one
Vehicle
that
maintenance.
now here, this is one, and I was just going to go to this: leases for vehicles. What does everyone think about that?
I think that would be acceptable.
Okay. How about for copiers and or postage machines? I don't know that's I'm not sure that would fall under utilities.
Well, those are not utilities. If you, like Madison said, use your Form 990 as a rule of thumb. Your Form 990 has a separate line for equipment rental, equipment usage, that sort of thing.
Right, and we just got one for insurance, and I think insurance would be a separate expense. I
Yes.
don't remember seeing that in any of the guides. I don't know if any of you have seen that.
I have not seen insurance
Right.
associated with the utilities.
Yeah,
Right.
I have not seen insurance either. Nope.
Right. So,
And there's one for condo association fees for rent.
That's an iffy one. I would recommend that, again, you align the reporting of your Form 990, work with your CPA to, figure out that total. But I would use caution. I would take a more conservative approach until all of these details are ironed out.
I agree with what Madison just said. Will CAM charges be part of rent? I think we kind of touched on that. I think if you typically include CAM in rent expense on your financial statements, internal, external, and 990, I would say the answer is yes. Okay, and then we have one more. I thought we could include leases on personal property, which would include copiers, etc. I don't remember seeing that, but I'm going to defer to Frank and Julie and Madison. I don't.
Yeah, I would have to take a look at that. I don't recall seeing that either, Joe. But yeah, I'm going to make a note of that and check into it.
Right. So if you don't mind, whoever asked that question, please feel free to reach out to us directly. We'll be happy to get back to you on that.
Mm-hmm.
Okay. All right. So this is a good one, and it touches, the IRS came out, and I've lost track of my timeline, and they put out a notice that any expenses paid by PPP funding would not be deductible for small business, corporations, et cetera. Does that have any impact on unrelated business taxable income for a not-for-profit organization? And this is for any of you?
I would say no, not at all. It's going to be the loan is going to be recorded as a grant.
Mhm.
It supports the mission of the organization. I would say no risk of unrelated business income.
Okay. All right. For filling out the application, we got a question of, is there a guide? Madison mentioned earlier that the AICPA has the best one. We will have a link to that. It is in Excel. I do expect it to be updated. I'll also tell you that as a firm, we are more than willing and open to help our clients with this process. I've seen the application for forgiveness forms from the prior CARES Act. For anyone that doesn't know what the AICPA is, it's the American Institute of Certified Professional Accountants, or Certified Public Accountants, I guess. I guess some of us are professionals, and that's been the best tool that I've found so far. I expect that to be updated, and I would recommend that. I would recommend to our firm internally that we use that one. So obviously that would pass on to all of you. We talked a little bit about internally, we talked about other options if either I wasn't eligible for PPP because I had more than 500 employees, or for whatever reason, you know, maybe I'm not a 501c3 and I'm a 501c something else. What other options have you all seen that not-for-profits are using to supplement loss of revenue?
Yep, I can take this one. You know, some of the things that I've seen as far as funding from private and public corporations in Delaware, you know, the United Way has a campaign going, as does the Delaware Community Foundation. And then also, if you stay current with DANA, the Delaware Association for Alliance for Nonprofit Associations, they've had some great resources for rolling out new resource libraries and such.
Right, and Julie, I believe you and I had a conversation a few weeks ago, and someone that you work with did a virtual fundraiser.
Oh, right. If you know, the nonprofits and their spring fundraisers were canceled or rescheduled, and so we talked about creative ways of getting those going. I attended a virtual fundraiser. The net income from that virtual fundraiser exceeded the net income from the prior year live event. And so there are some other ways to go about replacing those fundraisers, annual fundraisers, in some creative ways.
I've seen some, and I'm going to be honest, anyone who knows me knows that I am not running anywhere anytime soon. I've seen some virtual 5Ks. I'll be honest, if someone's chasing me, I'm getting caught. So, but that's an option as well. So if you had to cancel a major event, now's a good time to be creative. Finally, we got a few questions, and I want to keep this broad because I don't want to be too specific. Frank, how do I record the funding? And then subsequently, when I use the funds, what's my additional, what are my journal entries? How do I do this? Whether it's QuickBooks or Sage or Microsoft Dynamics or whatever other, there's so many software packages anymore.
Okay, thanks, Joe. So first of all, in accordance with generally accepted accounting principles, this would be considered legal debt. So when you receive the funds, the entry you would make into your software would basically be debit to cash and a credit to the PPP loan payable account. And you would do this regardless of whether you thought the loan was going to be forgiven or not, okay? Then once you apply for the forgiveness through the application process, once you've been approved for forgiveness, the entry you would make would be debit the PPP loan payable amount for the amount of the forgiveness and credit grant revenue, okay? The amount that wasn't forgiven would remain on the books as debt and basically would be paid, you know, in accordance with the guidelines. In addition to that, you should be accruing interest at 1% based on the receipt of those funds, which again, if you use the money for the appropriate expenditures, that interest will be forgiven as well, okay? As long as it's done within a 10-month period, I believe.
Thank you. It's as of right now, the rule on getting forgiveness of the interest is you have to apply for forgiveness within the 10-month period, which was extended in the Flexibility Act. So just wanted to clarify that, because if you don't meet that, if you wait and sit on applying for forgiveness once you can, and you don't do it timely, the interest does not have to be forgiven.
Right. And in addition to that, some organizations are setting up separate bank accounts for those funds as well, so that they can track the expenditures and the outflows of the cash, you know, properly. So that's a consideration as well. Not required, but, you know, recommended that you do.
Right. We have a question on, do these entries differ if they cross fiscal years? I'll jump in on that. I think, and this is the position that I would take, and it really ties into the accounting principle of conservatism. I think I would keep even if you think you've achieved forgiveness, until you actually get notice that the loan has been forgiven, I would keep the loan as a loan on your books. You know, if you have audited, reviewed, or compiled financial statements by, well, I guess a compilation doesn't have to be by an independent accountant, but a review or an audit does. If you achieve forgiveness and get notification subsequent to year end, and I'm going to defer to Julie, Madison, or Frank, I believe if you achieve forgiveness, are you allowed to go back and record that as a grant prior, or is that as of the date you receive forgiveness?
Well, Joe, I would say as of the auditor's date, you're going to test for subsequent events. If the loan has been forgiven, you would record it as such.
Mm-hmm.
Okay. We have is the 10-month period start after the 24 weeks? The answer to that is yes. The 24-week period, just to clarify, the 8 or 24 weeks is your option, and this is as we understand it today. That is your option of what you're going to apply for forgiveness. The 10-month period is the deadline to apply for forgiveness. So as of right now, we don't know if you can apply early. So let's just use an example that you've achieved forgiveness in 14 weeks instead of 24. Can you apply earlier? As of right now, we don't know. My assumption is the answer is probably going to be no, because this is going to be a very difficult program for the banks and the SBA to monitor, and I don't think they're going to want any additional confusion. That's a educated guess, but that's really what my thought would be. We have about 11 minutes left, and I believe we've covered all of the questions that we've gotten. I'm going to just check the Q&A. I don't see any more in the chat. If I missed any, please go ahead and throw them into the chat. Oh, we have one. I didn't hear when the 10-month period is. Does someone want to take that? When does the 10-month period start?
After the 24th month, right? I mean,
the 24th week.
I'm sorry, 24th week.
8th or 24th.
Right.
Right.
Yeah, I think it's after the 24th, not the 8th.
Mhm.
If you elect the 8th week Does your 10,
I'm going to be honest, I don't know the answer to that one.
yeah, I thought it was after the 24th. I mean, we need to check on that.
Right.
Yeah, we need to be sure about
So,
that.
but the moral of the story is don't wait. Once you're allowed to apply for forgiveness and you believe you've achieved forgiveness, you should apply as soon as possible. And will our firm be willing to perform as a service the calculation of the worksheet and forgiveness? The answer is yes. We're more than happy to do that. For our nonprofit clients, we do offer discounted rates from standard rates. Generally speaking, it's about 80% of standard rates for something like this. The answer is absolutely. However, you do have to be prepared that you'll have to have all the documentation. You're probably going to have questions from us that we won't know the answer to. We can look at the hours on your payroll forms, but if someone works additional hours because someone resigned, we won't know if they're a full-time equivalent or not. So the overall answer is yes, but it'll be in a partnership environment. Can we do the forms for clients you audit also? Yes, because we will not be making any management decisions. If we believe something should not be on the application, we will advise you. However, it is management's form and we won't be able to sign it for you. With that, man, we have 9 more minutes. I can answer any questions. I know how exciting I am to look at. Okay, here's one. After 24 weeks from, sorry, Krista, you just posted everyone's contact information. I lost that question. I apologize. After 24 weeks from forgiveness or disbursement, I believe I apologize. I'm trying to follow the list of questions.
I believe she means from the disbursement of the funds.
Okay. I believe that if you elect the 24-week period for your forgiveness period, so we're going to expend our funds over 24 weeks as opposed to 8, I believe it's 10 months from that. Does that sound correct?
Yes,
I'm not sure
yes.
about if you elect the 8 weeks. I'm not sure about that. I'm going to say this, like I said earlier, if you're not 100% certain that you're going to get forgiveness in 8 weeks, I highly, highly, highly recommend using 24.
And to keep that consistent in all of your calculations and to all of your calculations.
Right. Right. And I know we've talked about this with our clients and with our team internally. This is a documentation game, if you will. You want to document everything. You want to have every piece of paper. If you keep things electronically, keep it electronically. Make sure it's backed up. Don't keep it on your hard drive or on your desktop where, God forbid, your computer crashes, you lose it. You're going to need every document to send to either your bank or whoever you went through to get your loan. Okay, we have another question on, if you elect forgiveness in 8 weeks, do you have to have the FTE at 12/31/20? I'll open that up for anyone who wants to take it.
I believe you do. I believe you do. And I would double check that once we're back in the office, but I believe you do have to have the full-time equivalent at 12/31/2020.
Yes, and I just confirmed that. I was reading my updated law language. So yes, confirm that to have that by 12/31/20.
Okay. One more. If I choose 24, can I apply for forgiveness before 24 weeks? The answer is we don't know yet. Like I said earlier, we're waiting on the new form that the SBA should release. I would like to see it come out this week. Your guess is as good as ours at this point. what my assumption is that you're not going to be able to apply for forgiveness before that 24-week period. Just because I think there's going to be a lot of data for the banks and the SBA to go through. So I think my intuition says you're going to have to wait until the end of the 24-week period. But if you've done all the calculations and you're confident that you have 100% forgiveness, I would just prepare it in advance and then send it the day after the 24-week period. Now, here is a follow-up to the 12/31/20 question, and I'm going to read this. Does this mean that you can't apply until 12/31/20 if FTE as of 12/31/20?
Yes, because your forgiveness is based on your maintaining.
Just to jump in very quickly, we have about 5 minutes left of our time period, and we want to make sure we respect all of your time. So we are happy to stay on a little longer for any additional questions. We've all blocked plenty of time for this today. For those that don't have time to stay on, I'd just like to thank you for joining us. There will be a survey coming out. I believe, Krista, you're sending that. And just finally, with everything going on in the world with the pandemic and everything, please make sure you're staying safe, make sure you're staying healthy, and our best to your families, your loved ones, to all of you. We really want to make sure that we convey that we want to see everyone safe and healthy, and hopefully sooner rather than later, we'll all be able to see all of you in person at some point. So with that, thank you. And any additional questions, please. Well, I looked for questions and I just saw some thank yous. So with that, there's a couple. Oh, thank yous. I keep thinking I'm going to find another question. I'm hopeful. And again, Krista has shared in the chat room our contact information. Krista, if you want to share that PowerPoint with our contact information for everyone. With that, I guess, how will we know when the new forgiveness form is available? I can tell you that it will literally be all over the place. I know we will blast it out through our newsletters and various channels. I'm fairly certain it'll be all over the news everywhere, and everywhere we can imagine. We have one that I'm still confused on the FTE's timing. Could you review that and how it interacts with applying after the 24 weeks?
So at the beginning of the 24 weeks, you'll need to calculate your FTE figure. You're then going to make sure that that figure is equal to or above the end of the 24-week period calculation that you're going to do. I'm hoping that that makes sense. It's a comparison of the two calculations, one at the beginning of the 24-week period, one at the end of the 24-week period.
Okay, so when does the 12/31/2020 date fit in?
So your end calculation at the end of the 24-week period must be by 12/31.
Okay. Thank you. That now it makes sense. Okay. I have to be honest with everyone on this. The first few iterations of this, I thought my head was spinning. I can assume that Madison's nodding and smiling. Frank has a little bit of a he's trying not to chuckle. We all went through it with you. And we got a lot of questions from clients where the answer was, I don't know. And I can speak for all of us. We don't like giving that answer. It's nothing we like to say. Okay. And with that, I don't see any more questions. I'm in the chat. Okay. with that, I'm going to just offer again, our contact information is on the screen. Please feel free to reach out to any one of us. We are absolutely happy to help you at any time. So thank you very much. And you should see a survey soon.
Thank you.
Thank you.
Have a great day.